Well, it was a volatile week in the world of finance. Our certified financial planner Paul Fain joins us again to narrate the highs and lows of this beginning of 2019. Paul, it was just so up and down. We were just talking about it.
Yeah, we just had a completely wacky week. You know, start with the government shutdown. You know, it's a negative, so the market typically reacts with a downturn. Fortunately, if you look, you know, at historic data points for government shutdowns, short-term downturn with a quick recovery once the government gets its act back together, right? So, you know, that's kind of weighing on things. Of course, there's a real human cost. I mean, there's park rangers that have to pay rent and mortgages. There's folks waiting to close on loans, and FHA's kind of open, kind of not.
Yeah, no, it's back and forth. We've been reporting on it all week, and I know that this had effect on some of the tech companies, especially Apple. Right, I mean that was a big deal.
Apple was in the news every day when I would turn it on. Apple stock is down about 35% over the past 3 months. They've just announced this past week they're going to miss their revenue projection by $7 billion. That's billion with a B, Sean. And they're chalking it up for a handful of things. You know, one is weaker demand for iPhones in China. You know, a lot of existing users, rather than buy a new phone or buying a replacement battery, the cell phone carriers are giving fewer subsidies, you know, when you renew your contract or trade in your phone. So, you know, Apple is a great company. It's falling a little behind, it appears, in innovation and new products. Warren Buffett owns it. It's probably one of the top holdings in anyone's core mutual funds in their 401k plan.
Yeah.
But you have to be careful. A lot of folks think, well, if the price is down real low, you know, should I grab it and make a quick buck? Anytime I hear quick buck, my warning flag goes on. So
I imagine so. Yeah.
For a long-term investor, there might be several points in the weeks or months ahead that it's a value to buy some. But again, you're getting it in your mutual funds for sure.
Yeah, no doubt about that. And we got about a minute left here. We got any financial news here in the win column?
In the win column.
We have to find something for the win
after
column, right?
a crazy week.
Yeah.
Well, I think there's a couple of things. Wall Street analysts predicted that last month would bring in about 180,000 new jobs. New jobs came in over 300,000, so that's a major win for workers. You know, anytime you hear about the Federal Reserve raising interest rates, we think about the negative, the increased cost of borrowing money. But it also will slowly trickle through to savers. So, you know, look online for high-yield money market accounts, look at CDs, look at short-term U.S. Treasuries. You know, through a brokerage account, you can buy, you know, basically 1 month, 3 month, 6 month treasuries, and we're starting to get into the 2.5% range, which just a few years ago interest rates were under 1%. So for savers, I think we're starting to see some wins, some W's in the win column.
Yeah, that's absolutely true. Well, Paul, I appreciate a good look here at what's so far been a wacky year here in the stock market financial world.
Let's look for the uptick, right?
Yes, definitely, Paul. Thank you so much. All right, we're going to